Welcome to Sathish Speaks channel. Should you invest in gold? If this is a question in your mind, you should watch this video till the end because I am going to decode all the investment philosophies about gold, like the historical returns, the difference between physical gold and today's most popular choices are digital gold. In digital gold itself, there are multiple options like ETF, like mutual funds, gold mutual funds, and sovereign bonds. So, which is the most suitable option for you? And most importantly, my personal opinion, should you invest in gold or not? I am Sathish Kumar, financial consultant and author of this book called Untold Wealth Secrets. And if you are watching this video, please click the like button because when you click the like button, there is a more probability to reach out to many people as you are enjoying. Many people also can enjoy. And if you want my recommendation on equity, mutual fund, or portfolio management in direct equities, you can connect with me. My WhatsApp number is there in the description. So let's start the video with the historical returns from gold. If you take last 40 years of return statistics, the gold has delivered 8.5 percentage of returns. If you take inflation, it is around 6.5%. The gold returns is 8.5 percentage. So that is a relationship between historical returns and inflation. And it's not only for 40 years, you can take 100 years, 500 years of statistics. Every time, every statistics you take in whatever the period, the difference between the inflation and the returns always remains the same. So that means that you can always expect this average return of 2% higher than inflation from gold as an investment. So let us look at what are the difference between the physical gold and digital gold. Should you invest with physical or digital? So the first difference is that when you invest in physical gold, of course, the physical gold means it is a jewelry, it is watches, it is a fashionable ornaments. So when you actually manufacture, design this, you got to pay for the manufacturing and designing charges, making charges, which is comes around 10%. So that is the first difference. So when you invest in a digital gold, you don't have to pay for this 10% of wastage or making charges. So that's the biggest saving when you are investing with the digital gold. But if you are a person who wants to have a touch and feel about gold, then I would recommend it to go with the physical as an option because there are individuals who like to possess that yellow metal. They want to see that touch and feel because the sense of possession, the sense of owning that metal, that gives a greater satisfaction. So if you want to satiate that particular aspiration of owning that metal, go with the physical. But if you are looking at as an investment option in gold as a commodity, go with the digital, because not only for cost as an option, you consider risk also. If you are buying a digital gold, the purity is also a challenge. You need to ensure how pure is the gold. There are certifications, there are standardization. You need to ensure it is your responsibility. But when you are buying in a digital gold, you don't have to worry about it. The fund managers or the schemes determines that. And most importantly, the protection, the storage. When you are buying a physical gold, it is your responsibility to protect it. So you have to hire a bank locker, you got to pay a rent for the bank locker that would cost you 20, 25,000, whatever per annum. And you need to protect that metal. But here, if you are buying a digital gold, it has been completely taken care. So that is also not a worry for you. So you got to decide that how you want it to do. If you really want a jewelry, forget about all the other facts, just go with the physical gold. But you are looking at as an investment option. So these are the advantages when you are buying it as a digital format. Okay, now let's look at the options available when it comes to digital format. There are three options available currently in front of you: ETF, gold mutual funds, and sovereign bonds. So when you are investing in sovereign bonds, the advantage is you will get 2.5 percentage of annual interest from RBI. It will have a direct credit in your account. That's the biggest advantage. But it also comes with a challenge of a lock-in period. The maturity of the sovereign bonds is around 8 years. So if you are looking for a long-term gold investment, then probably sovereign bonds make sense to you because it gives you returns 2.5% plus after the maturity you will get the appreciation value also. But it has got a long locking period. Please be reminded. If you wanted to sell it in between, definitely you got to sell only at a discount. You will never sell it at the maturity value at par. It will never go. So It's a long-term investment. But if you are looking for a short-term investment, then digital goals like ETF or mutual fund gold bonds makes much sense to you, because immediate liquidity after 1 year of period, there are no exit loads. You can come out even with the exit loads also. If you find the good liquidity, you can definitely uh, come out at any point in time. So those are the advantages of purchasing digital as a gold. So but gold has always delivered 2% of returns than inflation. So if you are settling yourself for 8 to 8 percentage of return or whatever, the inflation adjusted returns, then gold can be a good investment option. But if you are looking for a high kind of return, 2 times of inflation, 2.5 times, 3 times of inflation, gold is not going to give you. The long term returns from equity, 5 to 10 years time period, is 12%. Gold will never deliver that kind of return in the past, and it's not going to deliver in future also. But gold is an important asset as in an asset allocation or portfolio. If you are a very conservative customer, you can have up to 20 or 25 percentage in your portfolio as gold. If you are a normal customer, moderate risk portfolio customer, risk appetite customer, means up to 10 or 15 percentage of gold in your portfolio is more than enough, because the more and more percentage of gold in your portfolio is going to bring down the average return of your portfolio. It is an important asset, because whenever economy in crisis, the currency value coming down or the equity market is actually falling down or heading for a correction, gold will give you cushion, gold will give you good returns. But the return aspect is also to be considered. So 10 to 20 percentage of portfolio in gold is definitely worthwhile. More than that, you are bringing down your overall returns. So I'm Sathish, financial consultant and author of the book on Untold Wealth Secrets. If you want to connect with me, I am my WhatsApp number is there in the description. You can connect with me. And if you want to join my WhatsApp group, my link is also available, where I am sharing investment strategies and personal finance insight. You can join. If you like this content, please do click the like button. It can reach more people like the way you are seeing this video. More people can enjoy this video and this information. And most importantly, stay tuned. I will be sharing much more informative insights about the personal finance and investments. I'll see you with another interesting video. Bye bye.